Hala.
Even you allowed.
Yeah, pretty good.
So you're starting?
No, it's fine. So that means hello in Arabic. It's commonly used in the Gulf region. So thanks for watching my videos. And I had initially come to you to talk to you about our meeting with the CEO of Deutsche Bank, Dr. Henry Azzam. But that's changed. But today I will dwell upon one key point that he made, and that's that Islamic banking is very, very similar to that in Western countries. So prior to going to Abu Dhabi and Dubai, I really didn't know much about Islamic banking. And I think for those of you who plan on definitely doing business in the future in the Middle East, this is really something you need to know. So I prepared this for you guys today. And I'm basically going to describe Islamic banking. So Islamic banking is based on two main things. I don't know if you guys can see it because of the glare, but I'll say it. That's the Quran, which is essentially the Islamic version of the Bible, and number two, the Sunnah, which are the words of the Prophet Muhammad. And together, those form the basis of the Sharia, which essentially are the rules that govern Islamic societies. Now, Islamic banking has one main goal in mind, and that's so that risk is shared equally between a minimum of two parties. Okay, so Islamic banking is based on a variety of prohibitions. I've listed 6 over here for you guys to see. The first one is the Arabic word riba, which means that taking or receiving interest at high rates is prohibited. Number 2, qarar, which means speculative behavior. Number 3, maisir, which means that gambling and excessive uncertainty is also prohibited. The next 2 are basically rules to follow. So you shouldn't be investing in companies where accounts receivable divided by total assets is greater than 33%. Certain Islamic banks don't use the 33% rule, they use the 45% rule. The next one is another rule. So you shouldn't be investing in companies whereby cash plus interest revenue earned divided by the average 12-month market cap is greater than 33%. And the last one is that you shouldn't be investing in companies that are involved in the selling of non-Sharia products. So that includes pork, alcohol, casinos, and a variety of other businesses. So what is the thought for today? The thought is everything is relative. Well, maybe not everything, but in this case, as you can see, Islamic banking is very, very similar to Western banking with some slight differences. If we compare, let's say we can do a compare and contrast, if we compare a loan on a house, so a mortgage, the payments in both banking systems are essentially the same. It's just that the rate of return in Islamic banking is established with respect to the asset transaction and not on the interest on the money loaned. So essentially, the differences really are a matter of wording and how the transaction is essentially carried out. At the end of the day, Islamic banking tries to rule out unfair business practices and people getting rich at the expense of others. So hopefully you've learned something about Islamic banking today, and I'll look forward to you guys watching my videos next time. Bye!